But yeah, so it wasn't,
Okay. All right. Okay. I think we're good. So people will start popping in. Yeah. All right. Well, hello everybody and welcome this evening to Legacy Conversations. We got a group of lenders in the room tonight, y'all. So welcome. We're going to have them introduce themselves. Well, my name is Fontanese Green, and tonight we're going to talk about, are you dating the right lender? Because yesterday was just Valentine's Day. So are you dating the right lender? So we're going to talk about it. So everyone's going to introduce themselves. If y'all have questions, please put them, in this video, and we'll get them answered for you right on camera as long as we have them. So welcome in, share this out. Anybody that's looking to buy real estate, whether it's commercial, residential, we got the peeps for y'all tonight. So come on with your questions. So let's start with the lady in the room.
most important.
The most important.
Ladies first. So I'm Sarah Cipriano with Novus Home Mortgage, and I primarily do just residential lending.
Welcome, Sarah.
Thanks. Happy to be here.
I'm John Boyd with First Commonwealth Bank. I do a lot of different commercial lending.
Welcome, John.
My name is Mark Chewy with First Commonwealth Bank. I do primarily affordable lending, residential, first mortgage, and I just got a comment. What makes a good lender? We could probably talk about that all night, but I think what makes a good lender is why we're here, is education. A good lender will listen, but a good lender will also guide you to where you want to be after all the data is, I guess you could say, internalized and then verbalized back to you. So education is really critical, super critical, and that's why we're here. We're glad to be here.
Sure, thank you.
Chewy's still in the show early.
Early, he's in the game.
Can I get a do-over there? I had more to say.
All right, sir.
Good evening, I'm Aaron Aldridge, Director of Lending Strategies at Bridgeway Capital. We're a community development financial institution, or CDFI, and we do small business lending and commercial real estate lending.
Awesome. Well, welcome, sir. Thank y'all so much again for coming in tonight. Of course, my audience understands and knows that education is very important to me, to especially educate my community. And so that's why we're here tonight. So, and Chewy, who came out the gate swinging, started talking about what makes a, good lender. So, y'all, well, let's ask you guys, what do you feel makes a good lender?
I think really, what you said is awesome, but the fact that we can come from all different backgrounds, we can collaborate, we can bounce ideas off of each other, that's a huge thing, any field is very competitive and cutthroat and whatnot, but at the end of the day, when you just put your clients first and you're just trying to do the right thing for your client, you have to bounce ideas off other people and see what programs maybe they can offer that you can't offer, to do the best thing for them, So this is awesome, the fact that, a lot of great minds are in the same room.
Absolutely. Because that's who's important is the client. That's who we're working for. So it's important to make sure we take care of them. So anyone else want to answer that?
Yeah, I would have to agree. It's hard to follow Sarah and Mark here just with their answers, but I agree completely. I think product knowledge and knowing the market is super important. And from a product knowledge perspective, we were kind of talking about it early. I have a loan that I'm working on right now. It's kind of a tough deal. So what I did this morning as I was starting to really think through this loan is, I called Bridgeway. And I said to them, hey guys, what do you guys think about this? Here's the loan, here's what it looks like. Can we participate together here? Maybe we can pick up 50%, you guys can do 40%, the client injects their cash, we get the deal done that way. So, knowing what's going on in the market, knowing who to call and how to partner with people, because while it is a cutthroat market and, there's a lot of competition out there, at the same time, if we can all work together to help the client,
Right.
Yeah.
everybody gets ahead more quickly.
Absolutely.
Absolutely, yeah.
So going last, it's hard to add anything new.
That's why I jumped in there. I was telling him to go. Let me get in there.
I'll summarize by saying a good lender, I think, is a good listener first and a good communicator. Just to hear your client's story and try and find the right solution for their needs, to find something tailor-made for them, and then to communicate to them throughout the process so they know where they stand and take the guesswork out of it.
Absolutely.
Another thing I gotta add is it's a feeling too. I remember, and I gotta share the story with you. I was little, we lived in Cleveland, and I went to the bank then, my very first time with my dad. And I think my dad needed a loan, I wasn't sure, I was maybe 7 or 8. So I remember walking into this huge monolithic building. Everybody was quiet, everybody was real formal and whispering. And my dad, I could tell my dad wasn't himself. He was a little, maybe worried, maybe anxious. Guy came out, we sat there, big suit, big tie, big hat, you know, very formal. That's not what it is now. Not at all, not at all. So many people, especially first-time homebuyers, think that's what I'm going to encounter, and that's super intimidating.
Sure.
It's not. It's like this is. It's very low-key. We want to listen, we want to understand, and we want to be able to address your needs and get you going in the right direction.
Awesome.
And I mean, to your point, I think what's great about the people in this group, and I'll take a shot at other organizations here, is that you don't have to deal with those big banks where you get that feeling.
Yeah,
that,
exactly.
you can deal with real people that actually understand what you're going through, that may have made some missteps credit-wise in their lives, and hey, it's not all about the red tape, and hey, I want to get to know you, and from knowing you, I can figure out how to help you.
Right. Well, and I hear that a lot because we deal with, the cookie cutter stuff, but then also we do a lot of credit repair, because I can tell you a million times people call and they say, I already had somebody look at my information and they said I need to work on my credit, but they don't know what that means.
Right.
They're like, well, what does that mean? Like, do I pay off all these medical bills? Do I do this? And a lot of times what they're thinking that they should do that would help really does nothing for your score. So that's where it comes back to educating them and really listening and saying, okay, listen, we're gonna make a plan for you, and I'm sure all of you do the same thing. We're gonna make a plan and we're gonna get you to your end goal.
Right.
And it might take some time, and that's okay, because we're gonna hold your hand through it and we're gonna be there. That's what we're here for.
Absolutely.
And
and I know like a lot of communities, like that is a problem, because like how many of y'all went to college and the credit card people was sitting right there at the hall?
You get a t-shirt.
You got a t-shirt or a cup or something, you know what I mean? And so as an 18-year-old stepping on a college campus, like you're free from your parents, and here someone is giving you free money.
Spin the wheel.
You know what I mean? So it's just like,
I don't know if they still do that, but I got a $5,000 credit card my first day on campus. We're about to go out tonight. I gotta pay this back.
Right. And when the realization of having to pay it back hits, it's like, oh, wait a minute. But by then, okay, we done messed over $5,000. You know what I'm saying? Haven't paid it back, so your credit score is going down. So credit repair is often needed, just because of that college experience. You know what I mean? So we definitely have to educate and that's why financial literacy is so important to get in the schools. I believe.
Super critical. Yeah.
You know what I mean? For high schools, like it's so important to have that financial literacy piece.
I mean, and, I really enjoy Bridgeway a lot. There are some spaces that we really compete with one another, but there's some spaces that they're so helpful because, Aaron, you can talk to it better than I can, but even in the commercial space, they have different programs to help those business owners streamline their business. And hey, what do we need to do as far as setting up the business plan? I'll let you talk about it.
Yeah. So first, I would say that we don't want to compete with you.
Fair.
We don't want to compete with banks. We want to partner with banks. And just to speak on that, we're a nonprofit organization, so we have to raise funds that we use for lending. A lot of times that money comes from banks in their community development or CRA department. So that means our interest rates are generally going to be a little bit higher than a bank, and because they're not only our partners in lending, but they, in some cases, are our funders. We don't want to compete with banks. I did a presentation in Newcastle earlier today, and I said the same thing. I said, you don't come to Bridgeway and say, my bank is offering me 8%, can you beat it? Like, we're not in that space. But to get to where you were talking about, and I was going to get to that, so also being a nonprofit, not only do we have loan products, but we also have programs. One of our programs is called the Entrepreneurship Hub, where we, at no charge to the client, because it's grant funded, provide assistance. I would say break it out in between pre-loan technical assistance and post-loan technical assistance. So pre-loan would be credit counseling and credit repair. So we partner with someone that helps our clients with that. We also can help with, if it's on a business loan, in doing a business plan, financial projections. That could be done in-house with Bridgeway or partnering with a small business development center, an SBDC. And then post-loan technical assistance, we provide accounting assistance, which is helping someone maybe set up QuickBooks, making sure they understand what an income statement and balance sheet is, and just how to manage it. And it's one-on-one, like an accountant that we consult with and we pay to work with our clients. And marketing as well, so everything from developing a marketing plan, or even I'll back up and say, just making sure you have your branding and your logo and all that stuff right, to make sure you're online, then setting up a marketing plan. So we have marketing consultants that help with all of that. We have attorneys that can review documents and help you with anything, legal related, even if you want to create a new entity, helping you with the LLC paperwork.
So you're almost like an incubator.
They're like the
And so
SBA,
Right.
they're much more nimble.
Right.
Yeah, that's awesome.
Yeah, it's actually
I did
funded through the SBA.
Is it?
Okay.
Yeah, so we receive money from the SBA to provide what the SBA calls microloans. They're loans of $50,000 or less. So based upon how many microloans we do each year, they give us an SBA technical assistance grant, which is generally a few $100,000 annually, and that's what we use to fund this program.
Yeah, that's excellent.
That's awesome.
We need you. Like, this was like
So many
supposed
people,
to happen.
yeah, so many people need that, because even if they're trying to purchase or considering it, I mean, a lot of it goes off of taxes and P&Ls and things like that, and they have no idea what to even do with that, and they're still trying to do their own taxes on TurboTax and fumble with receipts. Yeah, I mean, all the time, because they're, especially in this environment with the economy, people are trying to cut costs and save money. So that's pretty impressive that we can do all that. That's awesome.
That's pretty awesome.
It's excellent.
Yeah, we'll definitely have to talk for sure, because my community needs you. So that's for sure.
Newcastle community?
Actually, I'm in Sharon, Hermitage, and Farrell,
Okay.
in Mercer County. So
So Bridgeway Capital, we serve 15 counties in Western PA. We have an office in Erie, an office in Uniontown, and then our main office is in Pittsburgh.
In Pittsburgh.
So,
Wow.
we cover all of those counties.
That's pretty dope.
And we're trying to get, I shouldn't say trying, we're starting to get into Youngstown and also West Virginia areas.
Youngstown can use you, that's where I'm from.
Yeah, for sure. Collaborate, I like it.
Yeah, for sure. Someone just said like that's a good program to have in every area.
It is.
Yeah.
For sure. So guys, let's talk about your specifics, because you all come with your own set of skill sets and what you do in the industry. So let's talk about that. Like, and what type of programs do you have that would help serve the communities? So again, Miss Sarah, let you go first.
Oh boy. So
I know you do a lot.
I know, I'm trying to think of what I might not do. I mean, I don't do commercial. I don't do that. But what we do is we do any type of residential first mortgage lending. So we deal with a lot of different grant programs. We deal with FHLB gives every bank-based lender so much money a year that they can use it until it's out. So we deal with those grants. You can get up to $10,000. They are income-based. So we have that. We do, obviously, you know, the PHFA. We deal with Chenoa funds, which is something that's not income-driven, you know, that helps a different set of clients get so much assistance, either 2.5% to 5%. But then we do all the other things that, you know, the traditional bank might not do. I mean, we'll go down to a 580 credit score, you know, and you can still get grant funds for that. So there's people who they might call and, you know, they think, oh, I don't have a 620 score. I, you know, don't have a 640. I don't have 20% down. There's a lot of funding that you can get or financing that you can get where you can have a minimum percent down, 1%, 3%, 5%,
Okay.
you know, and have a 580 score. So we deal with all the cookie cutter things, but we also deal with the things that are tough, the manual underwrites, that a lot of lenders won't do. So you just have to sometimes get creative.
Yeah.
So I like that though. That's the fun part. There's no deal is the same.
That's the truth.
So,
Even as an agent, I know that.
It never gets redundant. It's literally just, you know, a puzzle that you're constantly trying to find the right pieces and pull in the right resources to make it work for the client. So
Yeah.
we do a little bit of everything.
Love that. Love that. I have someone on here who says they're looking for a commercial space. They're like, so in our area, we have a lot of entrepreneurs, young entrepreneurs who, you know, really want to be entrepreneurs. Like they have no desire to be in corporate. So they're creating their own businesses. And of course, as a 1099 independent contractor, it's not always the easiest. So can you guys speak to that? Speak to those 1099 people, you know, and how you can help them?
You wanna go first, or you want me to go first?
I could, yeah. I'll touch on the last question, too,
Sure.
and then I'll
Sure.
feed into 1099. So again, we provide non-real estate as well as real estate loans. So when you say that you have a lot of entrepreneurs within your network, we're definitely there for pre-revenue businesses where we can lend just based off of a business plan and projections, as well as an existing business. And I would say our niche, we're a mission-based lender. So every deal that we do, we want to make sure there's some social impact. So by that, I mean, we want to lend to the underserved entrepreneurs, those that can't walk into a traditional bank and get funding or get all the funding that they need. So we lend to startups, we lend to restaurants and what some businesses, banks may consider high risk. We really focus on entrepreneurs of color, women, veteran, disabled or disadvantaged entrepreneurs. And so those are like people, so we focus on people and we focus on places. So low to moderate income communities, communities that are trying to make that rebound and that comeback in and around the Pittsburgh area is our focus. And yeah, I think we too can be flexible and creative in how we look at deals. So if someone comes to us and and they're an entrepreneur, I mean, we look at that all the time. If they're 1099 and they're coming to us with just looking at their tax returns or financial statements or things like that. So it's not that you have to be W-2 based. We can go down to 600 credit score. I've done some sub 600, as long as we understand the story. So going back to the question on what makes a good lender, listening and understanding the story, especially, you know, kind of recovering from COVID. Is someone's credit bad because they lost their job during COVID? Now they're becoming an entrepreneur, and still trying to catch up on their bills. You know, that's a story we would listen to, as opposed to maybe somebody that just didn't pay their bills for whatever reason. So yeah, hopefully I touched on that, you know, enough, but still tried to make it simple. I mean, we can lend to 1099 contractors. We do it all the time. In fact, we work a lot with contractors, your plumbers, your electricians, because a lot of times they can't go to a bank and get financing. They could come to us and say, I just got this $100,000 contract, but now I need funds to be able to pay payroll because they're not gonna pay me for 60 to 90 days.
Right.
So we look at those type of deals quite a bit.
So Aaron's basically a saint.
Right.
is what
I
he's
mean,
saying. He's basically a saint.
he's doing it all.
Honestly. Wow.
My goodness. Well, anyone else want to take that question?
Whoa.
Yeah, good luck.
Yeah, good luck.
Good luck. I
Right?
mean, I'm glad I went first.
No, so we're just really more in your traditional financing, and I think, Aaron would probably agree that the path that you would go as an entrepreneur is you probably, if needed, you start somewhere at Bridgeway, you finish somewhere at like First Commonwealth.
Yeah.
So, if it's a 1099 employee, can we work with that? Absolutely, sure. Because, and I don't want to get too technical, but it's just going to boil down to the overall cash flow debt service.
Sure.
So, in those scenarios, hey, you're a plumber and I need to buy a truck for my plumbing business. Perfect. We can fit that into our lending box. When I think about commercial lending with First Commonwealth, there's kind of two sets of that box. I have my kind of traditional financing that I do for businesses that have been around for 2 years, and I got 2 years of tax returns I can review and give that to an underwriter. And then there's another box, so that there's that SBA box where we're looking at stuff like our 7A program. That's where we can get a little bit more flexible and do stuff that's projection-based lending. And, hey, it's a company that is looking to expand, but, a great example of this would be a restaurant that I'm working on right now. Been in business for a couple of years, but they need to finance almost $3 million worth of expansion. Their current numbers don't say, hey, that makes sense. But if we look at that 7A loan and use the projections then make sense that, hey, if we give them this, they can pay it back, and the SBA is going to help the bank from a guarantee standpoint, so we can make it all make sense.
Got it. So that's that creative piece.
Yeah.
Mm-hmm.
And you know what? When I talk to people, what I always try to do is, and it sounds kind of bad to say it almost, but I want to either get you to a yes or to a really quick no.
Yeah.
And if I can get you to a quick no, for me it's usually not a quick no, it's a no, I can't do this, but here's somebody who can.
Right.
Right.
And I think part of being a good lender, what makes a good lender is developing these type of relationships where it's like, hey, that's not my box. And sometimes it's other banks that just have interest in stuff. Hey, I got a guy that we did some work for, he wants us to collateralize some jewelry, some like very rare jewelry. Hey, that's not really our box. Like that's not what we're looking to do.
Right.
But a Chase, a PNC, a big bank, that's their game. Fine art, that kind of thing, call them. So once again, being able to have those relationships where, hey, it's not me, call this guy.
Right.
And at the end of the day, the client's in a better position. They still get what they need.
Certainly. And at the end of the day, again, that's what we're here for.
Yeah.
Is get the client to where they need to be.
Mm-hmm.
So, what you got, Chewy?
The best advice I think I could give a self-employed person, 1099 person, is first, don't give up. It's the risk takers we know who've pretty much done everything. If it weren't for them, probably business in this country wouldn't be at all what it is today. But keep good records. If you're looking to purchase a home, an owner-occupied home, and you're self-employed, you're going to need 2 years tax returns. You're going to need a record of your income, which is documentation of your ability to repay. So if you do your tax returns each year and show zero income, there are certain elements of that income we can add back in to qualify you. But you want to definitely get with someone like these two fellows here and get a plan before you do your taxes if you're looking to purchase a home. You don't want surprises when that's on the line, and it could have been avoided simply by getting some good advice.
And to that point, I tell all my business owners, like, hey, spend the money. Don't do the taxes on TurboTax.
No.
Like, let's get you hooked up with a good CPA who not only understands your business, but understands your goals.
Yeah.
Because if that CPA knows, hey, they're looking to buy a house, those tax returns can look a little bit differently.
Absolutely.
If you're setting yourself up for a large purchase, then hey, you know, I just am operating this business and it's in a waning period. We're probably looking to shut down in 5 years. Very different way you approach those businesses. So if I could give any advice to Mark's point, is if you're a small business owner, you're a 1099 employee, spend the extra couple bucks, find somebody who can help you from an accounting standpoint that's going to help you get to what your goal is.
Absolutely,
Yeah,
yeah. Best advice for sure,
I would
definitely.
think we probably in our networks, because you know lenders really develop big networks pretty quickly of those kind of people, attorneys, CPAs, lawyers. I said that already, attorneys. But you know, those different groups of people that can help your clients get where they need to be.
For sure. For sure. No, that, I mean, and that's so important, and I see that a lot. Like I said, our community has a lot of young entrepreneurs, and so, you know, they want to grow their businesses, so that's important to them. That's great advice for them to know these things, because, you know, just like I put in the chat, like TurboTax is not always the best way, you know, and let them know, like, it may work for, you know, now, but your goals will depend on where you start to move. You'll start to move a little differently, you know, as far as that's concerned. So, what about, one thing that I've been talking to my peoples is about multifamilies, properties, and how to, I call it house hacking, where if they was to buy a duplex, live on one side depending on the loan type, and rent the other side, for people to start creating wealth. And so what would you guys say to multifamilies and, you know, beginning to create wealth for those brave souls who want to get into
For those who like headaches.
Yes.
You know, the common misconception to that, again, is that you need to have a ton of money down. And a lot of times you can buy a duplex or up to a 4-unit property and still have a very minimal amount down. It follows the same guidelines. So, I mean, you know, you don't have to have 20, you know, 50%, anything like that down. I mean, I hear that all the time. They're like, well, we wanted to do this because they're thinking about creating that generational wealth. They're like, they're the first people in their family to ever buy a home, and they're like, okay, I want to do this, but I'm looking down the line at having an income stream past that. And you can do that, and you can buy a multi-residence property with very little down and still get the same kind of grant information and funds that you would get otherwise. So yeah, I mean, there's tons of options. And Mark, I think before we went live, you were talking about all of the different things that you can do that is very minimal. I mean, even 100% financing.
Yeah, multi-unit properties are, well, first of all, you have to, I think, you know, come to terms with that it's really not passive income. It's rental income, but being a landlord, you are going to be involved with a lot of things at certain times you probably would rather not be. But that comes with the trade-off, with the rents received and creating that wealth. So there's a cost to it, and you have to balance that cost benefit. So if you do that and you make the decision to purchase a multifamily home, there's a lot of ways to do it. You can use some grants up to 1 to 2 units. If you get over 2 units, the grants pretty much are going to fall away. But there are still programs with minimum down if you're going to live in one of the units as a primary residence. And the perfect example of that is FHA. If you go over 2 units, you're going to need some home buyer counseling in terms of being a landlord. It's done online. It's pretty easy. It's very effective. It's very informative. But minimum down payment over 2 unit, yes. Minimum down payment 1 or 2 units, yes, as long as you're living one of the units.
You know, when I have that conversation with people about multifamily investment properties, I think for me the line is drawn in the sand at, well, how quickly do you want to grow this portfolio? What do you want this portfolio to look like? Because, you know, I deal with some investors that, hey, their goal is they want to buy 10 properties a year. Well, if you wanna buy 10 properties a year, what happens, from my understanding, you guys correct me if I'm wrong, you know, if you're buying 10 of these a year, eventually you no longer have the DTI because these are gonna be reported on your personal credit score. You're gonna start to run into a DTI problem, probably around number 2 or 3. Where commercial loans can be great is a lot of times these are non-reporting loans, and you're looking, instead of a DTI, you're looking at debt service. So is the property supporting itself?
Yeah, that's a good point.
So for me, it's always a question of, hey, can I do this loan? Yeah, sure, I can do it either way. You know, you want to live here forever on one side and rent the other side out, something we can look at. But if you want to buy 10 of these in a year, well, I need to not have that on your personal credit score. I need to have that as a commercial loan where I'm looking at the global debt service study, just your DTI. Because after 2 or 3 of those, we're going to start to run into issues.
Got it.
The only, I would say, exception to that, and it's something that's relatively new in the last couple of years that people have actually been saying, hey, we offer this, are the DSCR loans, where as long as the property is profitable, then you can lend on it. It's still gonna show on your credit, but they don't care so much about debt to income or anything like that. And that's more so for 1099 self-employed buyers. So you can do that, and you have to just make sure that the property that they're purchasing can sustain itself. But that's something that, you know, it's not a portfolio product, but it's a limited, you know,
Sure.
but it's something that's still an option to do. But yeah, if you're just going out there as a normal W-2 employee trying to buy things, you're definitely gonna run into that issue. Unless you have, and it goes back to what Mark was saying, you have to always make sure you're dealing with, you know, talk to attorneys, talk to CPAs, you have to have your paperwork in order. You have to have signed leases, you have to show your rents received. Like, you can't just take cash and say, oh, this is great, I'm gonna put it in my pocket, because, you know, you can negate a lot of that stuff, but you have to have your paperwork, you have to be organized, and you have to have everything in line, you know, to be able to offset the payment that you're making with your rents that you're receiving, so.
I mean, I think, to your point, one of the I probably have this conversation once a week. Hey, John, I'm a business owner. I didn't claim anything on my tax return. Like, I didn't make anything. I want to borrow some money from you. Okay, yeah.
You
Because
look nice.
yeah, it's a nice shirt.
I mean, you could be a saint, you know.
But it's always an issue because if nothing else, if you try to explain that to an underwriter, the first thing that they hear is there's a character issue there. The issue is, hey, I didn't want to pay tax returns, so I cheated the government. So once again, you know, you get a good CPA, you get a good attorney who can show you, hey, here's how you claim that income, and you can write some of that income off.
Right.
Uncle Sam's still going to get his,
Right,
but now you're acceptable to a bank.
Got it.
Good point, that's a huge point,
Mhm.
it's huge.
I was just gonna add, with Bridgeway, we could only lend to a business. So in the case of multifamily, yes, we can do that all day. As far as house hacking, we would have to lend to a business, so it would be a scenario where a business owns the property and you lease from that business, which I've never done that personally, but it could be done.
Okay.
We do that with owner-occupied real estate all the time, where a real estate holding company will own the property and say they own a restaurant inside that building. So that operating restaurant will lease from the real estate holding company.
Got it.
Never seen that done, like as far as house hacking, but
But it's happening more and more lately, especially with the whole flip this house culture. You
Yeah.
know, people are wanting to start LLCs, and they're wanting to put those houses into the LLC and collect rent or flip them, you know, buy them and then sell them and just keep doing that. So I feel like that's more of a trend that's happening lately. I know I get those questions all the time, and we can't do financing if it's in a business. So that's why it's great to network and to find people who can do it. Because that is becoming a thing, you know, especially in our area. We're fortunate where housing is pretty inexpensive compared to, you know, a lot of the country, so.
yeah.
I mean, once again, I just can't say it enough. Please have the right people around you.
Have a team, yeah.
Because I've dealt with these scenarios before where it's like, hey, I bought this property, got it for a great price, blah, 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 blah. It's in my name and now I wanna move into an LLC. And it becomes a question of, well, now you have to pay transfer taxes
Right.
to move it. But if you'd have talked to your accountant,
Yeah.
your attorney before, they'd have told you, hey, if this is the ultimate plan, put it in the LLC right now so you don't have to worry about those transfer taxes later.
Mm-hmm.
And, you know, 1% doesn't sound like a lot, but they start to get up there if you got some big properties, you're talking
Sure.
$500,000 property.
Yeah.
1% both ways adds up real quick.
Absolutely.
Yeah.
Well, and don't be afraid to ask questions, but the main thing that I could say, and I tell people this all the time, is like, we're your friends, right? Like, we're on your team. You have to be 100% honest and transparent, because if you're not, then we can't help,
Right.
you know? And that's all we wanna do, is to help and to guide and to educate. So I feel like some people are afraid, like, well, I don't really wanna tell John all of this. I'll tell him like half of it. And so you get so deep into the process. It's even just on a typical cookie cutter loan, and then you're like, you should have just told me. Like, I could have educated, and we could have guided you through that. And you know, like, that's awesome that you have a bunch of cash under your mattress. However, you know, like, there's just things that would happen, but people are so afraid. They get in their head thinking the worst thing that could possibly happen. And 90% of the time, it never happens.
Right.
So you gotta be honest and transparent, and your team is gonna help you. You know, they're gonna just launch you to the next level.
Absolutely.
Like, I think one of the things we do a lot of are commercial construction loans, where I'm gonna take a building and we're gonna build something out on, or we're gonna add on to it. And that's where people really try to get around stuff, and it's like, hey, I'm trying to hide some cost here. Which, fine, hey, we got your loan approved, it's done, but now we're in the back end of this, where we're doing draws that are based on work being done at certain time periods,
Right.
and I gotta come out and take pictures. So then it's like, hey, John, don't look at that. Well, don't look at what? Oh, that extra building that is on the property now, and or the building that's not there that's supposed to be there.
Just Photoshop it.
Yeah, just Photoshop. And it's like, you know, if you'd have told me this in the beginning, the easiest thing I could have did was increase the loan amount, finance that right in. But now we have to go back through a whole fight to get done what we could have done very easily.
Mhm.
So transparency.
Absolutely.
Just ask the questions, because it's so much easier down the line to make sure you're set up the right way.
Yeah, and even as an agent, like, my job is to make sure that my buyers know, like, look, we are your team. Like, we are here for you, to help support you through this journey. So what we need is full transparency. You know, what we need is for you to be open and honest. That way, just like you said, Sarah, like, we can help. You know, because if we know ahead of time, then we could start being creative and knowing what we need to do, you know, in order to get things done. So that transparency is definitely key.
I have a question. Do you guys do bridge loans?
No.
Just-
Nope.
Sorry. We're networking while we're talking.
No, I love it. I love it. That's why we're here. Yeah. So, like I was saying earlier, I know you guys like have some strong specifics, and we've of course touched on those specifics here. But is there something that like is your niche, like something that you have found that you know that works? If it's a product, or if it's just how you operate, just so people can get to know who you are, like, and what you're able to do in this field. You know, those niche type things. Is there anything specific?
Probably the best loan program, I think, I bet you'll agree with this too. If you're a veteran, is the VA loan, the VA home loan. There's a lot of people beat the VA up, and I'm sure given their size, there's a lot of things they don't do real well. There's a lot of things they do really well. And the VA loan program for a veteran works perfectly. It's incredible. It's the thing that makes it special is that the VA loan does not underwrite to gross income. So what that means is that on a traditional mortgage, you have what's called a debt to income ratio. If your debt to income ratio is above, say, 43%, then, things start to get a little sticky. That's gross income, so that's before taxes, income taxes, living expenses, or what have you. The VA underwrites to net income. So how much income do you have left at the end of the month? How many children do you have? What are your utilities going to be? What's the maintenance on the home? What's your food bill? What taxes are you paying? You need to show you have enough net income at the end of the month. Doesn't matter what your credit score is. You could have the highest credit score, have $20,000 in the bank. If you don't meet the residual income, it's not gonna work. But that's what makes that program good, is that they're that in tune with putting the veteran in a position where they're gonna succeed. And that's what makes the program work.
And you know, Mark, since you brought up VA loans, so I'm working with a buyer who is he is a veteran. And so what he's been saying is, I don't have to pay taxes, like real estate taxes or anything. He's 100% VA. What does that mean?
He's gonna have to pay real estate taxes.
And until, when you initially buy, but then he has to go through the county courthouse to
Yeah,
get
the home.
exempt.
Oh,
Yeah.
Oh, okay, so there's an exemption.
If he's 65 and or disabled,
And
then
it is both.
the real estate tax amount will be reduced.
Another neat thing with VA that is unlike any other loan program is you can get an unlimited seller's assist if it's going towards, your closing costs, your prepaids, all of that. The guideline, when you read it, it says 4% of the purchase price or anything to cover your prepaids, closing, title, appraisal, all of that. So you can get, on a $100,000 loan, we'll say, if somebody wants to give you $10,000 in seller's assist to cover, like, say it's a property maybe in Sharon that the taxes are just crazy high, they pass the residual, their debt to income's good, everything else, that seller can give them essentially 10% in seller assist. That's the only loan program that you can get. Really, the sky's the limit.
Yeah.
Now, if you're paying off debt at closing and things like that, they're not going to cover that. But for anything else, it's really great on those properties where you might be in a situation where, like, Sharon has 3 schools, so the school taxes are just out of this world. Or I'm sure down in Pittsburgh, the taxes down there have to be crazy in certain neighborhoods. So that's a really unique feature of only VA can do.
Wow.
That's
A lot of
very
people don't know
interesting.
that.
And what concerns me about VA loans is that many veterans don't even know that they have that option.
Yeah.
My son's calling me like he doesn't know I'm working.
So is it that he doesn't know you're working, or is it he doesn't care?
Look,
He's hungry, Mom.
right.
What's going on
He's
for dinner?
24 though. He's like,
okay.
he's an old
I
man.
got a 12-year-old. She doesn't care if I'm working. Like, Dad, I needed this right now. So, like, can you come back from Pittsburgh?
Right. Oh, these kids.
You're making me feel good because, Aiden is 17. He can drive. He races cars, right? So he's not afraid to drive things. He's had his license for a year and he will not drive himself anywhere. I am still the chauffeur. And so it's funny, for his birthday, I said, I'm going to get you, if you're not going to drive yourself somewhere and you want Taco Bell, you're getting DoorDash. So today, right before I was coming here, he's like, I need you to order my DoorDash. And I'm like, you know how to use your phone. You're out of your mind right now. So you're making me feel like my life is normal because I was questioning a lot of things today. Like,
totally normal.
wow.
But probably because he has a speed limit. That's probably why he doesn't like to drive
Well,
himself.
his
Because he races cars, right? So
But
He's gonna get next.
he
Yeah.
said, he goes, Mom, I take him to school every day. I pick him up, and he's like, you drop me off at the door. And you pick me up. He's like, why would I mess with the parking lot? And
I
I'm
ain't
like,
mad at him.
all right, that's
It's
good.
true,
That's good logic,
Yeah.
but you're killing me.
Yeah, so you're very normal. Your life is normal.
Okay, that makes me feel better.
Yeah.
I feel like as a lender, none of our lives are actually all that normal.
I mean, only to someone who understands you.
But in this group,
talking
we're
about-
very normal.
yeah. We're talking about transparency here. We're like, yeah, we're totally normal. This is great.
In full transparency, our favorite thing to do is just play with our calculators at home.
Right.
Yeah.
That's what we do.
Oh my
Mhm.
God.
It's all weird numbers people.
Yeah, that's what John would do. John would be like, I would call him about a property, a commercial property. He's like, you got pen and paper? Write this down. Start writing. Because he's talking and he's going through numbers and he's like, so what's the total? So that's how we do.
Yeah. Bad deal, Fontanese, by the way.
Don't leave it alone. Walk away from it. So, so what advice could you give the buyers today? Like, what's going on in the market that you're seeing? What type of advice can you talk to them about? What's up? What's the tea?
The big thing I would say has to do with market appreciation.
Mm,
Purchase prices going up, going up, going up, going up. If you're thinking you're going to purchase a home and you're thinking you might time the market, meaning wait for prices to come down, you're never gonna own a home. If you want to own a home, do it now.
mm,
Don't wait. Yeah, prices, they go up, they go down, they go sideways, they do whatever. Who cares? Well, none of us can affect that. We have no bearing on that whatsoever. What matters is moving forward with your life if this is something you want to do. So that's the most critical advice I would get. I get a lot of calls, oh, the houses are so expensive. Last year I could have bought this house for this. What should I do? I'm not gonna do anything. I tell them, well, don't do that. Don't do nothing.
right.
Reconsider it. And let's look at some numbers and go from there.
Good advice. Anybody else?
You know, I think, I speak for myself, we're just in a different space from that commercial standpoint. Because small business owners have needs, right? So if you need an operating line of credit, or excuse me, operating capital in the form of a line of credit, you need that today. It doesn't matter what the interest rate is. It matters that, hey, I need this to keep my business alive.
Sure.
So in a lot of cases for us, you know, outside of just the real estate stuff, we have almost a duty to our business owners to say to them, hey, here's what we believe is good for you. So my advice then would be to have those open, transparent discussions. Because I didn't know you brought on 4 employees and we may be going into a recession. So like your money that you had saved up is starting to diminish. I can help you with that, but if you don't tell me that you brought those employees on and I know what's going on, I can't help you.
Right.
It's really nice for small business owners because they're a lot of times less rate sensitive. Because, you know, to Mark's point, hey, this may be the rate today. We can look at doing a modification. We can look at refinancing this thing 5 years, 7 years, 10, however long it needs to be. But if your need is now, let's not just sit on our hands and do nothing.
Right.
Because a lot of times, what I'll tell business owners is, hey, when times are good, do things then. Hey, let's put that line of credit in place now so that when we are looking at a recession, when interest rates are high, it doesn't matter, it was already there.
Yeah.
As opposed to a business owner who sat on their hands to the very last second. Now it's like, hey, John, I need the bank to save me. Banks don't like to be put in the save me position. We like to be in the, hey, we prepared you for this position.
Right.
Yeah, that's a good point.
Well, and even just to piggyback off both of those 2 points, the rate on rent is 100%. Like, you're not
100%.
doing yourself any favor by paying your landlord. You know, like you have nothing to show for it at the end of the day.
Unless you're a landlord, in case, keep paying.
Yeah. Yeah, but you know, I hear that all the time, and I'm sure you all do. You know, the rate is this, the rate is that. What you literally have zero return on what you're paying in right now. Like there's no return on it. So to Mark's point, like literally, don't sit on your hands. If you are in the mindset like I want to own a home. You know, there's not. It's like timing the stock market. You know, you don't do that. You just the rate on rent is 100%.
Right.
It makes 6% seem not that bad.
Right,
Or
for
5
sure.
or whatever. You
For
know,
sure.
so
For sure. For sure.
I would say my advice we're not a mortgage lender, so we would lend to an investor. Would be get to know us, get to know the lender and what each lender can offer. Cause I know what Bridgeway is great at, and I also can speak to what we're not so great at, to be transparent about that.
Sure.
So if an investor wants to come to us to purchase properties, whether it's a single family home, multi-units, today I closed on a deal that had 14 residential units and 5 commercial units. We are very flexible as far as the amount somebody can put down. So you don't have to have 20% to come to Bridgeway. We want to see some skin in the game, but that number is, it's a gray area. 5, 10, 15, 20%, whatever you're able to put down. However, on the flip side of that, because we're a nonprofit, we're small, it's probably 30 of us, and we're super busy, we're not fast. So someone comes to me and says, there's multiple offers on this property, I want to get it, can we close in 30 days? The answer is no. Go see John. But you might have to bring 20% to the table, or I don't know exactly what First Commonwealth requires. So I guess what I'm saying is, as an investor, as a buyer, know what each of us will require.
Right.
And how fast the turnaround time is, what the terms are, things like that.
Got it. That's good.
Wow, he just like wrapped it all up with like,
I
date
mean,
the right lender, right?
date the right lender.
That's
I mean, yeah.
Look, these two, like them to my left, right, we're the hard way.
They can't, I mean, it's looking like Klay Thompson and Curry. I'm just saying.
As we talked about earlier, like, we're gonna have to go outside after this.
Right.
That's a conversation.
I'm gonna sit right here. I heard what happened there.
Oh my
Still
God.
gonna enjoy some nice weather.
Yeah.
Oh, yeah.
So yeah, I mean that was a great wrap up, Aaron. Thank you. Like doing my job. Appreciate it.
He's a saint.
I mean, and look, somebody on here like agreed with you. They're like, yes, he is. Like, so you,
Aaron the Saint, yeah.
right.
Saint Aaron, I'm changing your name on my phone. Saint Aaron.
Every time he called, like, just have angels music.
That's been weird.
Oh my God.
Your wife might have questions.
Right. Man. No, but this was absolutely amazing. Like, thank y'all again. Any last words that you want, anything else you want the people to know? Like, could we how are we gonna get y'all information? Like, should we just,
I'll leave some cards.
okay.
I was gonna put my card right in front of the camera. Just
Put it in there. That would be John.
And this is like 1990s. I have a thing that holds cards and that.
Well, good
Those
grief.
are really popular then. The metal chrome ones too, remember this?
Look, and I have mine on my phone. It's a QR code, so.
I think the benefit is I can leave those cards. So if you talk to someone that says, "What was
Look,
the
someone's
guys from
asking me to
Bridgeway
post it.
Capital? It was
Yeah.
on your podcast. Oh, I have his
Can you
card."
post a picture?
Yeah,
Yeah.
I'll put them in comments. So what I'll
Okay.
do, guys, is I'll take
Yeah.
pictures of each of the lenders' cards and I'll post it in the comments right in this video. So you guys can be able to reach out to whoever you need, because all of them come with a different set of skills, but we'll work together. Did you hear the collaboration in the room? I mean, like, this is awesome. So if you guys don't have any more questions, yeah, we're gonna go ahead and sign off and probably still chat and network a little bit, but we'll make sure y'all get the information. So thank y'all for watching. Thank y'all for coming.
Thank you.
Thank you guys.
Appreciate y'all. So, all right, y'all. We'll talk soon. Have a great one.